because a lot of people talk about this 529 plan for their tax code, and they try to use the tax leverage and so forth. Are you utilizing that program?
No, I'm not. Not because I don't think it's good. Just for so my story is I've done tax just about all my life. I became a financial advisor, and then I was an institutional money manager, making money on or doing trades on Wall Street. My job got eliminated, right? Then I went and started a partnership, and that failed, right? So all my savings was gone. So I've been kind of starting from the beginning, grinding from the bottom, grinding to the top from the bottom again. So that's me. So I didn't have some of those things to utilize because I was just trying to keep food on the table and keep the lights on.
Welcome everybody back to another exciting show of the About That Water podcast, where we help you build strong financial habits. And one of the cool habits that I want to help you out with is taxes. And you know, there's so many people that talk about taxes and want to figure out taxes, and taxes is one of the things that we all have to pay for. But I'm not an expert, so I'm bringing on an expert by the name Camari. He is actually a tax advisor and strategist, and actually an enrolled agent. Okay, we're going to do a deep dive into this, and he's been doing this well over 25 years. Graduated from HBCU up at Temple University. I'm not sure what they're called.
Was that at HBCU?
Oh, isn't that Temple? Not.
I wish.
Okay, that's the one.
So I am an HBCU wannabe. I will put it out there. Right. I wish I went to Howard. Like, I'm jealous of everybody. Everybody has great homecoming. I didn't have the traditional college experience. Mm-hmm. So, I didn't get the chance to do any of that type stuff. But if I could go back and redo it again, I would go to HBCU.
Okay. For some reason, I keep thinking Temple is one because a lot of people that I know went to Temple. So.
Yeah. I mean, there's some black folk there, but it's the majority, right? It's PWI.
Okay.
But, Temple has a lot of black folk there. They got a lot of black folk there.
Gotcha. But yeah, so Camari, welcome to the show, sir.
Thank you, sir. Thank you for having me, Anthony. I appreciate the opportunity.
Oh, no problem. So for those of you who don't know, like, Camari does actually go live on Wednesdays as well. If you can just tell a little bit about your show before you're doing a deep dive into your stuff.
Sure. Well, I'm Camari Ellis, the Finance Rebel. I got that name somehow because I used to do a lot of radio, still kind of do radio from time to time. But anytime somebody would bring up a topic, I would kind of refute and say, no, that's not accurate, because there's so much garbage out here. And then it says Camari is just against everything. He's a rebel. And it's funny when my friends heard that name, it's like, actually, that really is Camari, because he looks at things in a total different manner. So the name's fitting. It fits me. It's right. It's accurate. Basically, on the show, we talk about all things money, tax, taxes, business, economics, but all from a Black perspective, because I was brought up as an accountant, but I always kind of been in love with business and the stock market. And the one thing I always thought that was, I don't know, kind of awry or missing in the Black community was we always had money issues. And so I said, well, I'll go to school and major in finance, and I'll save the Black community from all its money problems. Yeah. Quickly did I learn. Right. Quickly did I learn. It's not that easy. If it was that easy, that issue would have been fixed a long time ago. Which just goes to show that there's a lot of other issues that are going in to the Black experience around money, around Black wealth. And so I like to talk about that. Also, I used to do a lot of radio. I had a show on AM radio here in Philadelphia, and this was almost a decade ago, might be more than a decade ago, right? So the whole Black wealth movement had matured to the place where it is now. And I was like, there's no Black people out here. There's no people that look like me. So you know what? I'm going to keep doing more and more of this. So I've been around for a long time just because I wanted to see more people looking like me talking about wealth, talking about Black wealth.
And that's one of the things that's, like you said, if we had that magic knowledge to actually solve all the problems. But as you already found out very quickly, is that education isn't the end all be all of it. So that's the reason why I came with the show, talk about habits. So what are those common habits that you see in the Black and brown community that that could be the easiest fix, or the thing that you think we should focus on?
It's not money related though.
Okay.
The thing I feel the Black community should focus on is culture before anything else, right? So there's too many of us that kind of see ourselves in the eyes of the columnist, so to speak, right? So we can only see ourselves in that way, and this isn't everybody, but there's a lot of us that see it that way. So if we don't have a high net worth or a high self-esteem of ourselves, then money just kind of goes any old kind of way, with no thought, no care for the future, no care about legacy and future generations. It's just, what can I do today to satisfy myself? And, that's not a put down. That's just the product of years and years and years of abuse and systematic racism and white supremacy.
Hey, we got a lot.
Sorry to be so heavy.
No, it's good. It's good. Because one of the things is that we all know that money isn't the end all be all. It's just a tool to kind of get us to where we want to be.
Absolutely.
And to make us culturally aware and try to build ourselves together as a community. It's going to take more than just the finances, because you throw money to football players all day, and how many of them are broke after they retire?
Football players, athletes, Powerball winners, any of them. But what I find interesting is that if you look at any group, right, whether it be, I don't want to say any names so I don't want to get you in trouble, but any ethnic group, right, that does something of power, that has something going on, the thing that sticks out to me is they are about their culture. Typically, there's outliers here or there, but they're all about their culture, and they're all about representing their culture. And that's usually first and foremost. I mean, money is money. How to create value and extract money from your consumer is pretty straightforward, for the most part. But to really keep it and multiply it and make it go generation upon generation, that's something different. That takes a different type of sauce.
Gotcha. All right, well, then let's change up the sauces, because like I said, that's a whole other show, right? No, you good.
I'm sorry.
That's a good introduction to Camari, and the thought processes around that we really need to have in our community. But today I think we really want to focus on taxes, because it's something that's going to hit us all immediately, like in a couple weeks at this point.
Yeah, it's it now. People are getting them done now. So,
right.
The deadline is April 18th this year. And that's for individuals. But for those in your community who have S Corps or multi-member LLCs, their deadline is March 15th. So, they got to have their stuff in early. A lot of people I see aren't prepared. Everybody has terrible books.
All right. So how do we get better with our books? Just even as a regular consumer, how do we get better with our books?
I think it's what you talk about a lot, right? Habits. So if you decide to do a thing, you got to do a thing, but then you got to figure out what that thing entails. And so we're going to be in business. Every business needs good books. Every business, because if you don't have good books, you tend to overpay for things, especially taxes. You don't have a way of systematically being able to project out and build strategy and plans around it. So the capturing the transactions of your money going in and your money going out and who it goes to and when it goes to it, it's a pattern. It'll show you a pattern. And if you understand that pattern enough, you can use that pattern to make more money, be better prepared for taxes, be better prepared to hire staff, just be better prepared to build wealth, like real wealth. Nope. You ever seen a Buffett or any other billionaires have crazy books, especially those with public companies? Their books are in order. It's a priority. We got to make it a priority.
Okay. What would they use? Do you recommend using Excel or some type of quick apps or anything like that?
So everybody's different, right? So if we're talking personal finance, just tracking that, I might use a Quicken or a Mint. If we're talking about actual true bookkeeping for a person's business, I use QuickBooks. I have my clients use QuickBooks, but there's other apps out there. I'm not the QuickBooks fanboy, but I do work with them because it's, to me, the easiest one that most people use. I'm not trying to learn a million and one different apps, but you have apps like Wave, you have apps like Zero. There's some other ones out there that you can find. It's really just about figuring out which one resonates with you. Gotcha. Some are a bit more accounting-esque, and some are a little bit more, what's the word I'm looking for here? They're a little more laid back.
Yeah. Oh, laid back. Okay. Yeah. Years ago, that lollipop syndrome was like, yeah, it's nice and easy.
Right.
So can you, since you're an enrolled agent, what is the difference between an enrolled agent and a tax preparer?
Okay. So let's talk about what an enrolled agent is. An enrolled agent is a tax person who studied tax, mastered tax to some type of level, and passed a series of tests issued by the IRS. And then once they pass those tests and pass the background check, you can be administered or accepted to represent taxpayers before the IRS. So it's the only credential that allows people to represent taxpayers in front of the IRS. Now, there's others that can do it as well, like CPAs can do it, tax attorneys can do it as well, but the enrolled agent is the only credential that, sets you up to do just that. Now, an enrolled agent, the difference between an enrolled agent and a tax preparer. So I'm going to assume you mean an unenrolled tax preparer, because that's how we talk about it in the industry. Okay. So an unenrolled tax preparer, all times does not have authority to represent taxpayers, with the few exceptions of if they did their tax return before, they can talk to the IRS for the taxpayer, but that's not even really considered representation, so to speak. And an enrolled agent can have their client sign what's considered a power of attorney with the IRS, with the Internal Revenue Service, and then they can handle business for the taxpayer with the IRS directly without them being involved. So if they get audited, the enrolled agent can go sit before them with their collections. If they have other disputes, they can do all that. Your typical tax preparer is not doing that. But just to be fair, there are a lot of dope tax preparers who are not enrolled agents. They've been around a long time. They just don't feel like getting the credential. And I understand that as well. But and also they're not held to the same standard as enrolled agents are. Enrolled agents have to get a minimum total of 72 CE credits every 3 years. And you have to do them within a certain time frame. So education's real big. You are held to a different standard in terms of ethics versus a tax preparer. So there's a whole level of accountability that's baked into the cake as well.
Cool. So what is the biggest mistake that you see most W-2 workers do with their with their taxes?
So this is a kind of a end around. The biggest mistake I see a lot of W-2, just plain Jane 9-to-5 employees do, is not enrolling their 401k or 403b plans. Because your 401k and your 403b plan is a retirement plan, and the money comes out pre-tax. So the money comes out before taxes hits that money, and it goes into the 401k. So you get a tax break there, and the money grows tax-free or tax-deferred until you deem to pull it out later on. I think that is one of the most awesomest cheat codes for wealth that I've seen that a lot of people miss out on. And I know there's a lot that say, the administration fees are high and everything else, but usually a lot of times with these 401ks, there's a match, meaning their employer gives them free money to invest.
Right.
So even if there are high fees, you're getting free money. You're getting free money to build your wealth nest egg. So to me, it's a win-win. It's a win-win.
Yeah, I think now when I was just looking around at the different job markets out there, think I've seen as high as some of the employers would do a match for match up to 12%. And I
That's
was
really
like,
high.
that's really high. Like,
Really high. Yeah.
and I was like, huh, that is a lot, because a lot of people don't even do 12. Average I've seen before that, I was like hearing maybe 6, 7, because the government does about 5.
Yeah, I see 5. I see between 3 and 5 pretty often. I've never seen 12 before. God bless whoever has that job.
Yeah. And then
They should
besides 12, I
automatically
saw
put
10. Yeah.
they should automatically put 12% of their pay into that sucker without a thought. Don't go past go. Don't think about it. Just do it.
Let's do it.
You'll thank me later.
Yeah, because correct me if I'm wrong, by doing so, they actually modify the AGI, which is the adjusted gross income. And because I think now the IRS is doing a free tax return for people that makes under 73,000.
Absolutely.
Yeah.
And it's not just now, they've been doing that. So there's a couple of things that the IRS has this program called VITA, VITA, Volunteer Income Tax Assistance, which I volunteer with for a little bit. It's a dope program for low income people, but I think theirs is like 56,000, right? So you can find people to do your taxes for free if you make less than 56,000. Then going back to what you were talking about, the 73,000, if you do their free file program, it's free for the most part. Now there are a couple kinks in the system. Because what the IRS does, and I don't know if they've rectified this or not, but they were pushing a lot of people to go through TurboTax and H&R Block.
H&R Block, yeah.
Yeah, and what happened is H&R Block and TurboTax figured out a way to promote a lot of the free people to still pay for one of their services. So they got kind of free advertisement, and they still were able to make some money on the back end off of it. It is what it is. It is what it is.
Free business, and we just talked about them, so I guess it's free advertisement again.
You can believe it out. I'm sorry.
No, you good. No, it's fine. But if y'all listen out there, TurboTax and H&R Block, please contact me at Anthony about that wallet, so we could talk some business. But as we go through our taxes and so forth, what are the as you could say, do you feel that women are leaning more into their taxes than men are, or?
Now that's an interesting question. I've never gotten that one before. I would say yes. A large part of my business is women, women business owners, women real estate investors, women, especially sisters, Black women, are definitely about their money. So yeah, I would definitely say it's definitely more leaning towards the ladies. Yeah, they tend to be more involved. Even with a husband and wife couple, a lot of times it's the wife who's getting everything going.
I wonder if it's a guy thing, just to be like, we don't go to the doctors, we don't go to other people for assistance. We got it on our own. How do we get over that stigma though? Like, I'm just thinking about it.
Is it a stigma, or is it just men have ego? Large size egos. And I'm the guy, I don't want to ask for directions. That's why I read maps. Right? I don't like listening to the GPS. It drives my wife crazy. I don't want to listen to the GPS. Tell me how to get there. Right? I don't like to go to the doctor. I'm getting better with that though. I'm getting better with that because I want to live. But yeah, I do think men, because there's requirements to being men, right?
Yeah.
Like if you don't do, and this isn't to shame any sisters to say, or women, but nobody's going to go to a woman and say, you need to know how to pump gas, or you know how to change oil, or you know how to change a tire. Like there's prerequisites to being a man, and you're not supposed to have to ask how to do these things, because if you don't do them, then you're automatically deemed less of a man.
Yeah.
Right. So I think some of that's kind of baked in the cake.
Okay. Yeah, you're right. That's one of the things I got to work on myself, because I don't like to do a lot of stuff. I don't even cut my own grass. I was like,
listen, that's good. I'm not mad at you, because you know why? Your time is your most valuable asset. And so if you are having, I don't know, Anthony, do you have any hobbies besides podcasting?
I do bowling and biking.
Right. So if you would rather bowl or go biking instead of cutting your grass, that's better for your quality of life. Life's short. Enjoy it. You can afford it. Hey, no shame in that.
Right.
No shame in that at all.
Yeah, usually I have them cut the grass while I'm doing podcasts and work anyway. It's like I can't be at two places at once, and it takes me about 4 hours. Because cutting it the way I want it cut, versus somebody else.
Anthony just told us something, y'all.
Oh my gosh,
Got like 10 acres.
They got no 10 acres.
Got 10 acres. 4 hours, man.
It takes
4 hours.
Because you got to switch the machines up, from the lawnmower to the blower to the trimmer.
Yeah, that's okay.
But
that's 4 hours.
Look, but because it's not something I do all the time, it's that learning curve there. Got to prime the machines and get the gas right.
Oh man, I got an electric lawnmower, but I'm fortunate because I have children. So they keep me at a house at home, but I ain't cutting no grass.
Right.
They cutting the grass.
So what about these taxes, man? What is it? What's something new in 2023 that people should be aware of and try to start prepping up their taxes now? Because 2022 is done. We obviously got to get our paperwork for that. But 2023, to set ourselves up for the year coming, what should we do?
Well, I would say right now there's a couple of things going on with the IRS. The IRS still has a backlog of over 10 million tax returns that have not been filed. They're still catching up. So I would still say be patient. They are getting better. They hired a whole bunch of people. They got a whole bunch of money from Congress, which is actually a good thing. I know some people think it's bad, but it's a good thing. Because before I couldn't even get through to the IRS when I was calling. But I would say they're still having some problems. So I wouldn't rush to get my taxes done right away because they're making some adjustments to some of their code. Like they're debating on if some of the state refunds for COVID relief should be included as income, even though it was never included as income previously before. So they're telling people to hold off. So I would hold off. Plus, a lot of people like to run and get their taxes done, but oftentimes all the forms have not been dispersed to clients as of yet. Like if you have any partnership returns, sometimes some of your brokerage returns haven't given you all of your brokerage statements. So you need all those to make sure you do a good return. If not, it could be an issue. Some of the credits have gone away. So some of the child care credits and the dependent care credits have gone away because they ended at the end of 2022. Mm-hmm. So they won't be around anymore. A lot of the Trump tax changes at the end of 2017, beginning of 2018 are not going to be around beyond 2025. So I know it's still 2023, but that's right around the corner. So things could possibly change in the very upcoming tax seasons as well.
Yeah, because I'm actually wondering about because one of the things that Trump put in place, which was investing inside opportunity zones. As long as you locked in for 10 years, and then once you're in there for 10 years, you can get all your capital gains from that aspect.
Which capital gains aren't taxed.
Aren't taxed, right?
Right, yes.
So with that being said, similar, because a lot of people were getting into investing back in 2020, and people are probably still investing this year as well, and they actually pull out their money before the whole year. Was it like 12 months and 1 day, something like that, from they first did their first transaction? And if they sold it prior, will they be taxed they should be taxed at the same rate, if I'm not mistaken, or at a higher rate than if they would have waited.
Oh, you're talking about long-term capital gains.
Long-term
short-term
capital gains.
Right.
Yes.
So that's a little bit different than we're mixing it up with opportunity zone funds. So no, it's fine. I just want everybody to be able to follow along. So if you sell an asset, a stock, cryptocurrency, for a lot of people who don't want to report their cryptocurrency, please report it. But if you sell some crypto, if you sell a house, a real estate investment property, and you made a profit, you should report it. But guess what? If you lost money on those items as well, you should report it. because there could be a tax deduction or tax break for the loss. It's income. If you made a gain, you should report it. So yes, you will get you get a different tax break for if you hold an asset for a year or more, 12 months or more, the tax rate is different. It's lower. If you hold it for a year or less, the tax rate is higher. So yes, that could be really, really important when it comes to tax planning and getting everything settled and put together.
Okay. And where would somebody go to learn about their capital gains tax?
I mean, Google or the IRS.gov.
Okay.
It's not top secret. Some people think it's a little convoluted and tricky and scary, and it can be sometimes. But I guess I am biased because I've been doing it so long that it's almost second nature to me.
Mm. So because as we go about our financial life, should taxes be part of our conversations as much as it is with credit and also just saving and budgeting?
It should be bigger. It should be bigger than credit. Taxes are more important than credit.
Okay.
Right. If you think about it, normally your biggest expense is going to be tax. You pay, well, let's just go off the top, right? The state tax, where I'm at in Philadelphia, there's a local tax, then you have federal tax. Then let's not mention all the other taxes, cell phone tax, gas tax, real estate tax, your mama tax. Like there's a tax for down there, everything, right? So if you can be proactive about reducing some of those things, you should be. Now let's go back and let's talk about these taxes, right? So the highest tax rate is 37% on the federal level. And then I'm in Pennsylvania. So Pennsylvania's tax is 3.07%. So we at the top of the rate, and that's a lot of money. You're making a lot of money if you're at that rate. But that's 37% plus another 4%. And then if you're in Philadelphia, that's another 3. It's 3 and some change, right? So let's round up to 4. So that's like 41% just at the top of the range. So for every $100 you make, you're paying $40 in taxes, roughly. And again, that's at the top of the range. You're making a bunch of money at that range. And again, that's before all the other stuff. So basically, you're working just to pay taxes a lot of times. And I don't think that's right. Now, I'm not anti-tax either, just to be clear. But just to give you a reference, right? So if you are single and you make more than, let's say, $540,000 a year, you are paying 40% or 37% on federal taxes. Now, if we go down the other end of the spectrum, if you make, let's say, $10,000, your tax rate's only going to be about 10%-ish. But with all the other deductions and everything else, you'll probably wind up being zero. But which one would you rather have? $10,000 a year or $500,000 a year and pay the taxes? So if you want to kind of live have any kind of normalcy to life or good quality of life, you're going to tend to want to make more money. Now, I know there's some people who intentionally don't want to make money for various reasons, but they're not your average person. But, you got to think about that. So let me give you kind of the average range. Let's say you make $100,000. If you make $100,000, I'm looking at the chart right now, you're going to be paying about 24% in federal tax. So that's 24%. In PA is another 3% for state tax. And then in Philly is another 3 to 4%. So that's 24 plus 3 is 27 plus 4 is 31. So there's another 31% off the top. It pays. So, right, you made $100,000. You now have $24,000 in taxes, $24,000 in taxes. So subtract that right off the top, you're left with $75,000 just in taxes. We're not even talking about food, clothing, and shelter yet. Right. Forget about taking a young lady out on a date. It gets expensive. Don't go to Starbucks.
So I say it's cheaper to keep her.
Yeah, take a long walk in the park.
One person, right?
Yeah, take a long walk in the park.
Long walk in the park.
Listen, even that's expensive now. I mean, everybody's complaining about eggs, right? Cost of eggs have been through the roof. So it costs. Everything costs.
Now, what got me thinking, if you could break down the tax structure quickly, if you don't mind, which is like, because I know each bucket has a range.
Oh, you want to track tax brackets?
Yes.
Okay, so this is going to get a little funky, right? Because tax brackets change based upon your filing status. So let me look at it right now. So, and it's not all cumulative. When each bucket fills up, you move to the next round. But
let's do it by single.
Well, I'm going to give you the filing status. So you got single, then you have married filing jointly, and then you have one for married filing separately.
That's right.
Then you have one for head of household. So there's all different kinds of tax brackets, right? And also remember, so the tax brackets are like ladders. So go through single?
Yeah, let's do single filing head of household.
Oh, you want to? Okay, so they're two different ones. So you have a single filing, and then you have a married filing separately. You said head of household, or
head of household.
You want head of household? Okay. Yeah. All right. So from $0 to $14,650, you're in a 10% tax bracket. But this does not account for any of your credits, whether you get a child care tax credit, educational credit, dependent credit. Any of those things get lowered down, but this is just kind of a hard and fast rule. And y'all blame Anthony for making me do this, but I'm gonna do it. But again, from $0 to $14,650 is the 10% tax bracket. So if you make up to $14,650, that first $14,650 is taxed at the 10% tax bracket. Then when you go up, the next bracket is $14,651 to $55,900. Right? That gauge right there is taxed at 12%. So that bucket, that range is taxed at 12%. Then the next bucket is $55,901 to $89,050. That bracket, that bucket, that range is taxed at 22%. And so if you want to write these all down, it'll probably help you work through these a little bit easier.
I'll put a graphic over it. You good? Okay.
Then the next range is $89,051 to $170,050. That is a 24% tax bracket. The next bracket is the 32% tax bracket, which ranges from $170,051 to $215,950. That's the 32% tax bracket. The 35% tax bracket is $215,951 to $539,900. That's the 35% tax bracket. All right. And this is the last tax bracket because the highest tax rate for individuals in the United States is 37%. That is $59,901 or more. So if you make over if you make over $539,901 or more, you're paying 37% on those ones. So again, it steps up from each level. So it's not straightforward. You kind of got to calculate it. But from all that, right? These are called what's the word I'm looking for here? I'm getting old, y'all forgive me. These are called effective tax rate versus a marginal tax rate. So you have an effective tax rate and a marginal tax rate. The marginal tax rates are the rates I just read off to you all, right? But the effective rate is when you add all the other stuff in, your tax deductions, your tax credits, and all of those things. So you have to be, you kind of got to think about that. But planning will come into a factor and say, hey, we might be in the 37% tax bracket because you're making a boatload of money this year. How can we reduce your income? What are credits that might work good for you, right? So like everybody's kind of excited about this whole solar energy credit for vehicles, EVs. Well, that's good if it meets the right criteria for the company. And I do think there's an income threshold for that. But there's a lot of different little nuances you have to key into when you're looking at planning. So everybody should be doing planning because again, we're talking anywhere from 10%, right, on the low end to almost 50% or 40% on the high end. That's a lot of money over your lifetime. That adds up. That adds up.
And that's very true because I think it was recently coming out like how the Tesla vehicle, their Model X is falling into that price range.
Right.
And I think one of them is too far out the price range, but they decided to do it just a price cut of their vehicles. I forgot what it's called. Lucid Motors did that.
Yeah, a lot of people have done that because, I mean, essentially this is like corporate stimulus, right? Mm-hmm. Because they're incentivizing regular consumers to go buy these products from corporations to give that industry a little bit more oomph, a little bit more support via taxes. So, you got to think about it. Taxes it's a tool, right? A lot of people don't realize this, but the tax system, the tax code is used to incentivize things that are good for the U.S. economy or disincentivize things that are bad for the U.S. economy. So you kind of got to think about it like that.
So what do you say to those people who complain that they have to pay their taxes versus getting a tax refund?
I would say 9 times out of 10, they're not making any money.
Okay.
And that's not to be disparaging, right? Because listen, I was there at a point. I had a conversation with my wife, like, we're not getting no more tax refunds anytime soon, so don't look for them. And she looked at me like I had 3 heads. Serious? Yeah. But, you get this gas and this bacon. So,
right.
We're able to get premium bacon now. So you got to forego some things. But what I would say is that even if you are getting a tax refund, some people use it as a forced savings. Some people get it because the tax code changed and they were fortunate enough to meet the criteria. I would just say use it to the best of their ability, whether add it to their savings, invest more, invest in themselves. I wouldn't just look at it like, oh, great, I got this free money from the government and I'm just going to blow it all. I would try to use it to the best of your ability for some things.
Nice. Yeah, because it's the only reason I asked that question is because I was learning about the deductions, not the deductions, I think it's what the withheld rates that you can do for the state versus the local. They usually say like from 0 to 10 for each one of these, or however high you want to go.
Yeah, they're called exemptions.
Okay. So say if somebody just wanted to have that money now, would you advise anybody to modify those or just kind of keep it at 0?
So that's a nuanced question. It's going to depend on how disciplined the person is, because people do that. There's all kinds of programs out there. I call it the exemption game. They'll tell you to maximize your exemptions or file exempt and not have any money taken out, so you can have more money in your paycheck. The problem with that, and I've seen it a million times, is that people forget that they've had a lower reduced taxable amount or lower reduced amount of taxes taken out of their check. They get to the end of the year, they don't have discipline. Remember, discipline is the word here. And they get this big tax bill. And they're like, oh shit. Oh, excuse me. I don't know if they're like, oh geez. What are we going to do here? Right? Oh shucks. What are we going to do here? We owe the IRS a couple $1,000s and I normally get a refund.
Right.
But had they been saving all throughout the year, they could have kept the money throughout the year, put it aside, and be able to pay that tax bill when it came due.
Yeah. Most
people aren't like that. But again, that's why I say it's nuanced. So if you're disciplined, cool. If not, I would say, file the appropriate rate than what you are. If you're married and you have one child, I would say file married with one exemption. Then that way, when you get towards the end of the year, and if you just have one job, and this is not tax advice, right? If you just have one job, you'll tend to break even or owe a little bit, just depending upon, a few factors. That's kind of the safest bet. To me, the best thing to do is owe a little bit when you get to the end of the year. Again, a lot of people don't like that, but it's better to want to get your money throughout the year just from straight finance 101. Yeah. It's better to get your money throughout the year because, one, you have control over it. Mm-hmm. Two, you can invest it and utilize it and leverage it for your own personal gain. When Uncle Sam is holding onto your money all year long, all of those things are off the table and you can't do anything. But again, if you don't have discipline, Uncle Sam is going to send you the tax bill at the end of the year. Yep. It's an honor system type thing, right? They'll trust you, but when it's time to pay the bill, you got to pay the bill.
Exactly. They give me every time. And that's when I open up a new credit card, pay for it, get all my points, and travel for free. Like,
well, that's a strategy. That's a strategy. I hope you're just not getting killed with interest doing that.
No, because like you said, if you save the money, I'm gonna pay them anyway, and I've been disciplined because that was the key term there. Been able to save that money throughout the year, and it's like tax season comes. Like, well, I'm gonna pay them anyway.
Right.
So instead of them coming out my check, come out the credit card, and then I'll pay the credit card off and get all the points I need to travel for that year. So it's a little travel hack for you guys. So
yeah. If you got good credit. So we know from this interview, we know Anthony's got like 10 acres and he's got excellent credit.
Thank you for that.
Wait a minute. Is that snitching? I don't know. Is that dry snitching?
I don't know what it is. I know these terms. Out of the streets. So, as we talked about here, talked about the taxes, talked about some of the strategies and so forth. I want to try to slide into the third segment, which is talking about the futures here a little bit. Okay. And like, what are those habits and skill sets that you think you'll need for yourself to take you to the next level?
What do you mean when you say me to the next level?
Like where you at right now in life, finances, what are those habits that you're looking forward to utilize and taking yourself to that next level, even if it's just to that next rung on the ladder?
It's a lot of things. Are you trying to be my therapist today, Anthony? Because I think about this all the time. I need to market more. I need to build bigger infrastructure or better infrastructure in my business. Mm-hmm. But especially market more. I mean, I do a pretty good job, but some people will say I'm a little sadistic. So like greatness is like a whole thing for me. Mm-hmm. And some people are like, well, Camari, how do you define greatness? Greatness is how you define greatness, right? But for me, it's just trying to be the very best I can be. Mm-hmm. And I feel like I've lost a little bit of time for various reasons. So now it's like, it's go time. We got to get it. And so I'm looking to do more marketing. I'm hiring more people in my business to take it to the next level. That is what I'm basically investing in. And one of my main factors or one of my main vehicles is education. So I do a lot of content. It's geared towards education for the most part. Now, I always say if I did more flashy stuff, like go buy a G-Wagon or go buy an Escalade and just put it on social media, it would probably be good for business. Right. But it's not something I actually believe in. So I'm not willing to go to that, past that limit. Like things need to be stuff I actually believe in. So when I say it, I'm saying it with my chest and I mean it. But, I'm not just going to do something to cap and just do it for the gram. But that would get me to go a lot faster. Yeah. But that's what I'm looking at going to the next level. Like my daughter's going to college this year, later on this year. She got some scholarships, but it's not all scholarships. So I have to navigate that. Plus, my son is coming right behind her in 2 years. So it looks like I'm going to have 2 kids in college at the same time. So yeah, you look at that, you laugh like
I know
it's serious out in these streets.
Right, because I'm thinking about. Well, can you expand on that a little bit? Think about it from the tax perspective, because a lot of people talk about this 529 plan for that tax code, and they try to use the tax leverage and so forth. Are you utilizing that program?
No, I'm not. Not because I don't think it's good. Just for so my story is I've done tax just about all my life. I became a financial advisor, and then I was an institutional money manager, making money on or doing trades on Wall Street. My job got eliminated, right? Then I went and started a partnership, and that failed, right? So all my savings was gone. So I've been kind of starting from the beginning, grinding from the bottom, back from grinding to the top from the bottom again. So that's me. So I didn't have some of those things to utilize because I was just trying to keep food on the table and keep the lights on. But now things have definitely changed. Things are looking up. I've been to the valley of death, and I've made it back. So I didn't have a chance to take advantage of 529s. However, there's lots of tools you can take advantage of. 529s, cash value life insurance, what we're talking about, savings for college. I think they're all good, viable options. It just depends on what you want to do. Just depends on what you want to do. And also just a basic brokerage account as well. You can do that as well.
That's right, yeah, because you can do it as a what they call them things.
UGMA or UTMA, Unified Gift to Minors Act, Unified Gift Transfer Act, something like that. Or Unified Transfer to Minors Act. So UTMA, Unified Transfer to Minor, UGMA, Unified Gift to Minor. They're all basically the same. Yeah, it's just different fancy words.
Yeah, just to give them to the minor. Because that's one of the things that I'm glad that you actually was being transparent with that one, because we hear about it. People always talk about it in the financial space and saying like, just go down and contribute to your 529 plan for your kids so they can go ahead on and do whatever. But they fail to talk about how it is when you're still going through that paycheck to paycheck.
Yeah, like real life.
Right. Life happens. And it's like, you can't afford all these other vehicles. They sound nice. It's great.
They sound real nice.
But if you're not in that right financial space to actually take advantage of it, then you're not going to.
It means nothing.
Right.
Zilch. Nada. Yeah.
Oh. Yeah. And that's one of the things I like to educate, people that are listening, or even as I'm going through it myself, which is learning all these things, is that when we trying to reach people, it's best to try to reach them at a one-on-one level and try to get them beyond that next step so that they can take advantage of a lot of the vehicles that are out there. It's just that I'm actually thinking about it now. It's like the millionaires have access to other vehicles that we can't take advantage of because we're not millionaires yet. Well, at least I'm not. I don't know about you, Camari, but
I will be soon. Huh? I'm working on it. I'm claiming it.
Yeah, we won't be
manifesting.
Yeah, all right. We're gonna manifest because this is a picture segment. Yeah,
that's right.
When we get there, we get to tell you guys now more different avenues that open up to the millionaire space, because a lot of millionaires aren't talking about the stuff that's available to them at that level. They talk about the stuff that is available to the rest of us.
But you know why that is, though?
No,
they don't. I mean, I work with a lot of millionaires, but they don't take advantage of everything that's out on the market. They do the things that, one, they understand, right, and they, two, that they see that can work for them. Everything doesn't work for everybody. Just because it's a good product doesn't necessarily it fits your overall strategy or wealth building or whatever it is you're trying to do. I know a lot of real estate people who only do real estate, like bricks and mortar, will not touch a stock to save their life because they don't understand it. They don't get it. And I don't like that, but I get it and I respect it.
That was one of the guys said on Bigger Pockets. He was like, I don't own stocks. I don't even have a brokerage account. all I did was real estate. And I think he just started his account just last year. And he's living in Maui, all this extra stuff. He's like, my retirement accounts is selling these houses. Done. Like, it's like,
to you, when you hear that, what do you hear when he says that?
To me, I hear like, hey, I mean, it gets me to think about what exactly is retirement. That's what it gets me to think about. And the second thing is that he has an asset. And ultimately, when you look at stocks, they are just assets of a company. And if you look at it from just at an asset to asset level, it makes sense. Because it's like how you buy in the stock, you buy for long term, you buy a property for long term. When you sell the stock, you get the long term capital gains, taxes, whatever that is, at that time. And then the same thing with the property. Most of the time with a property, you don't own anything. It's kind of given to you tax free, if I'm not mistaken. So I think it's about the same. I think it's a good strategy.
When I hear you talk about that, the thing that sticks out to me is focus and the power of focus. So yeah, you could do all these glitzy, funny things, right? But a lot of times it's the focus that really gets you across the finish line. That's the thing that really takes you from good to great. And I don't think a lot of people understand that. Again, we could talk about G-Wagons. We could talk about getting S-Corps and LLC, Twitter this and that. But the question is what you want to do and how are you going to execute it day in and day out? And that's what matters. I mean, he bought property and he said, I'm going to forsake and ignore everything else. And I'm just going to buy this property. And by doing so, he lives in Maui.
Yeah.
Right. So I don't know what his goals were, but it sounds like he hit them. He hit them and he's living the life he wants to live.
Yeah, now he's on a whole nother trajectory. Now it's to own multiple mobile home lots. So that's his next venture. And he's actually paying people, I think, $10,000 or $100,000 if you can find them a lot. You don't have to do anything. Just say find them a lot and then send it over to him.
Gotcha.
So that's his compensation for finding him the actual property. And I was like, that is really cool. If you're looking for something, hey, you get a cut of the proceeds or not. And I think he said even if he doesn't buy the property, you still get the money. So it's pretty cool.
So that's an old school term or technique called bird dogging, or what they have now is wholesale. You have a lot of wholesalers making money. And so he just put it out there. If you want to be a wholesaler, buy the property or at least locate the property, I'll pay you a fee. I'm not mad at that.
Yeah. Again, there's so much money out there. But like you said, focus on what matters to you, what makes the most sense. And I think that most of us in the financial space is just here to provide you those resources so that you can make the best decision in your finances. Cool. So, Camari, you have anything that you want to say to the people before we jump on over to the final 4 questions?
Final 4 questions? Oh, we got 4 more to go.
Okay.
What I will say is take taxes serious, right? If you're a business owner, make sure you have good books established. Remember your tax dates that are coming up. We got March 15th for people who are S Corps and who have multi-member partnerships. That's due again March 15th. Don't miss that date, because if you miss that date, the IRS will penalize you heavily. I've seen people have 4-figure penalties because they didn't file their returns on time. So make sure you do that. And the tax filing date for individuals is April 18th. Make sure you don't miss it. But in the weird case you can't make it, make sure you file an extension. And remember, an extension is just an extension to file the tax returns. It is not an extension to pay. So if you owe any taxes, you will still accrue any penalties or interest while you're in that extension time period.
Copy. All right. Ready for the final 4?
I don't know. Do I have to give up like any of my children?
No. No. Not like that. What is this, Thanos, where you gotta get up everything for the life gym?
Snap the finger.
Yeah, gotta do that. All right. Number one, what does wealth mean to you?
What does wealth mean to me? If we're going by the definition of the word, the real definition of the word, it means health and wholeness. So I would say it's my definition is time to do what I want and live a very productive and healthy life on my own terms.
I like it. Number two, what was your worst money mistake?
Oh, worst money mistake. There's a couple. There's a couple. Probably if we're going to go dollars and cents, probably my first money mistake, my worst money mistake was becoming a financial advisor. And that was, not that I'm not good enough to understand the concepts or grasp it and take the test, I did all that. But there was one time when I was a financial advisor, I did not get paid for a year because I did not meet the requirements of the contract under the company I was working at. People were buying too many investments from me, and I was not selling enough life insurance. And so I got into all kinds of problems. And so that's part of my overall journey too, why I don't have a 529 plan. So, and that happened before I went out on my own as a business owner. So that was a crazy time. I still don't know how I survived that.
Yeah, we might have to have another show just on being a financial advisor. What was that like? So, number three, what is your favorite financial or non-financial book?
All right, so my favorite financial book is, I just had it. I'm planning on doing a book review on. Oh, I'll give you this one. I think this is the book everybody should read first when they're going on their financial journey, and it's called How Money Works. It breaks down money very simply, a lot of graphical representations, but it lists money from A to Z. So we're talking about GDP, economic terms. We're talking about accounting terms. We're talking about investment terms. And it lays it out very clearly. So I would say this is probably my favorite. This is the one I recommend for anybody when they're just starting out on their financial education journey. I hate the term financial literacy. So let's say financial education.
You're the third person that said that today.
Good.
Since I've been recording, I recorded 3 episodes. You're the third episode for today.
Oh man, you're cranking them out.
Yeah. Who is that book by?
That book is by, I don't think there's an author. It's like just a publishing house. It's like DK.
Oh, okay.
So Penguin Random House is the publishers. But if you just put in a Google search or go to your favorite Black-owned bookstore, just ask them to say How Money Works, the facts visually explained.
Okay. All right. Then I'll ask for that book for my birthday then. Number 4, what is your favorite dish to make?
To make? Oh man. It's funny. I was a single father for a while, so I used to cook a lot, but I don't cook as much anymore. My favorite thing to make is probably steaks on the grill. Steaks and salmon on the grill. But that's my favorite thing to make. But it's gotta be on the grill.
And do you do yours like a dry rub or?
No. Sometimes if I want to get a smoker, so I plan on doing getting the smoker and doing a dry rub on there. But no dry rub. Every now and again, but no.
Okay.
I'll marinate it and then I'll just put it on the grill.
Nice. All right. The very last question is, where could people find out more about you?
So you can find me everywhere as the Finance Rebel. Finance Rebel. I'm on YouTube, Twitter, everywhere. You can find me Finance Rebel everywhere. And you can always find me on my website, which is phillytaxteam.com as well.
Awesome. Thank you so much, Camari. This has actually been a great time. And for those of you who are listening, please make sure that you take a closer look into your finances, take a closer look at your taxes, make that part of your normal conversation, because we all got to pay it. Learn those, what they call them things, the tax ladders, so that we all, the tax brackets, thanks. Learn your tax brackets so that it's a lot easier to understand and actually explain it to the next generation, because we all hear about handling that next generation as well as the current generation. So Camari, it's been a pleasure. Definitely look forward to seeing you go live as always on Wednesdays. We definitely got to stay in touch.
Absolutely. Thank you for having me.
All right, no problem. Y'all take care. I'm out. Peace.